Last week, the Securities and Exchange Commission cracked down on Binance and Coinbase, two of the biggest trading platforms in the industry. In the lawsuit against the exchanges, the regulator newly classified 16 cryptocurrencies as securities, including BNB, Solana, Cardano, Polygon, and the Sandbox. This has led to a significant price decrease across the board, with most currencies categorized as securities losing double digits. Today, we are going to discuss what are the best alternatives to coins and tokens that were recently classified as securities by the SEC. But first, let's discuss what's a security in the first place. Security refers to a financial instrument or investment that represents ownership or a creditor relationship with a company. Broadly speaking, it's a way for individuals, businesses, and organizations to invest their money or raise capital. The SEC believes that most cryptocurrencies fall within the securities classification, apart from Bitcoin, which it considers a commodity. While the SEC has deemed 68 crypto assets securities so far, the list could expand drastically in the future. The criteria that apply to currencies like Cardano, Solana, and BNB could just as well apply to thousands of digital assets that are currently outside of the regulator's scope. However, the SEC might decide to keep its focus only on a couple of dozen of projects for the foreseeable future, leaving others outside the scope of any of its legal proceedings. At this point, nobody knows how things will play out. With that said, let's discuss what are the best alternatives to coins that are seen as securities by the SEC. BNB, formerly known as Binance Coin, is arguably the most prominent crypto attacked by the SEC in the latest round of lawsuits. BNB allows users to get trading discounts and other benefits when using the Binance exchange. BNB is also the native asset of the BNB Smart Chain, a platform that allows users to create tokens, NFTs, and make use of smart contracts. If you are searching for alternatives to BNB, then Ethereum is likely your best bet. Ethereum supports smart contracts, NFTs, and the creation of ERC20 tokens. In addition, Ethereum was proclaimed not a security by a former SEC official, which makes it more likely that the regulator won't go after it in the future. What's more, Ethereum could see significant price increases in the medium term, with our algorithm projecting a $10,000 price for Ether by early 2024. Another alternative to BNB in terms of its exchange functionality is OKB. OKB is the native token of OKX, one of the largest crypto exchanges. Like BNB, OKB allows holders to make use of discounted trading fees and is designed to be deflationary thanks to quarterly token burns. Solana is another prominent coin that was featured in the SEC lawsuit. Solana's arguably biggest strengths are its speed, low fees, and a rich ecosystem of decentralized applications. Avalanche could be a great alternative if you are looking for another Layer 1 chain that boasts high transaction speeds and low fees. However, Avalanche is currently not up to par with Solana when it comes to the number of users on the network. If you prefer a lively ecosystem over speed and low costs, then Ethereum is likely the best substitute for Solana. Cardano is one of the biggest currencies in the crypto market. It uses a unique variation of the proof-of-stake consensus mechanism, named Ouroboros. Cardano recently added support for smart contracts, although the feature is not yet as widely used as on Ethereum. In this sense, Ethereum could be the best alternative to Cardano as well. If you prefer a higher transactional throughput, then you should consider Phantom. Phantom is an open-source smart contract platform that can process up to 10,000 transactions per second, and charges just a fraction of a cent per transaction. The SEC focused on Polygon, a prominent Layer 2 solution for Ethereum, as well. Polygon makes transactions on Ethereum faster and cheaper using scaling protocols that process some of the data off the main chain. When it comes to scaling solutions, Arbitrum and Optimism emerge as the clear alternatives to Polygon. Arbitrum saw a major increase in the total value locked on its chain in the past couple of months, growing from $1.5 billion to $3 billion since the start of the year. Optimism saw a similar, albeit a bit smaller, relative increase from $600 million to $980 million. Both Arbitrum and Optimism are great choices if you are looking to save money on Ethereum transactions. The Sandbox, along with Axie Infinity and Decentraland, was one of the blockchain gaming projects featured in the SEC lawsuit. While the Sandbox is one of the best metaverse platforms in crypto, there are some alternatives that might be up your alley. Gala is a platform that allows players to earn cryptocurrencies and non-fungible tokens through gameplay thanks to the play-to-earn mechanism. There are plenty of games to choose from on the Gala platform, from RPGs to simulations and shooters. Another blockchain gaming-focused project you could consider as an alternative to Sandbox is Engine. Engine specializes in building infrastructure for NFTs that can be used in games. The project has worked with some of the biggest gaming companies in the past, including Microsoft and Minecraft. Engine recently launched the Engine blockchain, a Layer 1 chain engineered for NFTs and other digital assets at the protocol level. These were just some alternatives to coins and tokens mentioned in the SEC lawsuit. For more investment ideas, you can check Coin Codex, where you can explore thousands of cryptocurrencies and find projects that might be worth investing in. For additional information regarding SEC's crackdown on crypto, check our previous video on Ripple and the XRP lawsuit. XRP was the first major crypto asset that was proclaimed security by the SEC, and the results of the lawsuit could have major implications for other cryptocurrencies.